All right, everybody, welcome back. I'm Willa, and this is Willa Trades. If you're here because you're interested in day trading, and this is the perfect place for you to come and learn because I am 2 years in, and I've gotten more and more profitable as I went, and I thought that I'd share the journey because it's an ongoing learning experience, and for those of you who are out there, I thought it'd be perfect for you to share in my experience and grow. If you guys have any suggestions along the way, feel free to drop a comment. I love hearing the suggestions. If you see me looking at the chart in a way that you might look at it differently, I welcome the feedback. So let's get started. We're going to do our watch list today. The big thing that I'm watching is we've had a big move up. I'm going to zoom in a second, but I want to show you the big picture. So the big picture on this chart is we had a sell-off down, and this was about at the beginning of September, and then all through September, essentially after a little dip down to retest, we've had basically a move up. And so this is NQ. NQ is a big driver for the actual market. NQ usually represents tech, and then you're looking at the industrials to represent the other side of the ledger. At some point at the beginning of the month, there was a repositioning from the big major money holders and all of the different stocks in tech where they were moving out, and then they were kind of investing those funds somewhere else. So what we see here is since then the market has went up slowly, and you can kind of see that the market did a runoff. This was actually yesterday. So this was yesterday, and you see that the market actually did a run up after the market closed, and it's continued to run up. So here's what I'm expecting today. I want to be using this chart because I think this chart is going to be our best bounce scenario. And so if we were to look at this chart right here, which is NQ, around 451-ish area, I'm going to expect for us to come back down and retest and bounce because they've got to pick up the orders. We also have a gap, and the gap is much further down. So this is an interesting occurrence. I want to go ahead and bring up our QQQ chart as well because our QQQ chart also reflects the NASDAQ, but it's just what's called an ETF, and most people actually trade this. So we're going to see what this looks like. So by the way, yesterday, if you actually heard what my logic was yesterday, we were actually going to push up. We broke the pre-market high. We came back down and we retested, and then we exploded up. So that was actually perfect. I actually did not get into it because I was looking at another chart. Hate when that happens. I usually try not to trade the first 15 minutes. And so because this literally happened in that first 15 minutes, I was caught off guard and did not get into that trade. But if you were listening to our watch list yesterday and you watched this retest of the pre-market high, you caught a banger, and good for you. Okay, so then what played out yesterday is we had this weird sell-off yesterday, so not a good day for me to trade because there was a lot of green, red, green, red, green, red, so we call that choppiness. So how I trade with out-of-the-money contracts, that's like your worst case scenario. And then at the end of the day, we kind of saw a push up. By that time, I had already checked out of the market. So I wasn't able to capture that. But what we see post market is we see that there's been a continuous run up. If I can get the move, there we go. There's been a continuous run up. Let's zoom back out. Zoom back out. So we see that there's been this continuous run up on the market, and right now we're coming and we saw a little bottom here. We saw a little basing here at the pre-market low, but we also saw another one right about here, this 491. So we'll probably go ahead and put in a little level there to look for the reject. Now this was the previous pre-market high. As you can see, it's moved up. As we get closer to market time, we're going to go ahead and edit that. 494.21. It's probably not the last time it's going to move up on today. So actually for me, for the market to continue to move up before market is actually really good because that makes it a better chance that we're actually going to find a reject today. So my reject on QQQ really is this 496.6 area. I'm going to watch how it acts around 495 just because it's a psych level, but this 496 area. Plus, we also have this previous gap level at 493.15. Now this previous gap level, that means we haven't touched it during market open. That's why it's still existing all the way since July, and it's also how I knew we would come back up before we go down. A lot of people are looking for puts right now, but I knew we would come back up because QQQ hasn't, or the NASDAQ hasn't made all-time highs, and we had left the gap open. So what I'm looking for today is I'm looking for us to find a top and for us to actually reject. Let's go ahead and look at another chart. So we got the SPY chart up. You can see behind the SPY did essentially the same thing that NQ and QQQ did. We found the base and then we moved back up. Okay. And if we zoom in on this, this has been basically the last week. And you can see here that we've been chopping up. Then we had a big move up from the end of day, from close of day yesterday. And then here we're at 575. Now this is actually a good reject spot. Very realistic possibility. And really we say it's a psychological number. Whole numbers like 575 or 580, which by the way, I do have a fib reject up at 580. So if we get up there, if it goes crazy, then I'd be looking for a reject at 580. But this psychological level could actually cause the market to reject. I want to go ahead and switch charts again because those of you know I really trade SPX. I haven't marked SPX up yet, but we want to go ahead and take a look at it. Okay, SPX, because there's no pre-market on SPX. We've just got to come here and mark where our gap level is. And the gap level, for those of you who are new to this, just means that the market went ahead and moved up during after hours and pre-market and didn't come back down and actually retest this level. So we're going to go ahead and install this level so that we have it on our chart. And today's trading market today, 926. Change the color. Boom. Boom. Oh, we didn't make it show. Now, so for those of you who are new while I'm marking this up, the importance of gaps is usually the market is looking to find efficiency. And so the fact that it gapped up during after hours and pre-market, that means that that price hasn't been exposed, or the price between the gap and where the market is now hasn't been exposed to people who would have wanted to buy or sell during that place. So what will likely happen is where the people wanted to buy, it's going to come back down at some point and actually retest this level. So it's going to what we call fill the gap. I doubt that that happens today. If it does, I'd be shocked, but not completely, because there's a big gap between where yesterday is and where today is. Okay, we're going to bring up our ES chart. See, we got the ES chart. ES also mimics the S&P. So things like SPY, SPX, but this is the futures version. So we use the futures version to try to get an approximation on where SPX will open or where it is. So right now it's about 55 or 56 points away. So 58.28, and we're gonna go ahead and just do the math. 58.28 minus, we're gonna say 57. Minus 58.28 minus 57. 57.71. So what that tells us about SPY is that our 5800, excuse me, our SPX is that 5800 is in play as a psychological level. So we're going to go ahead and zoom out. What I'm doing is changing the charts around just so I can get some extra space to mark it up. So our 5800. So right now, SPY is hovering right around this 57.1 area as a potential open. So we're just going to mark that. Boom. Boom. We're also going to go ahead and mark this 5,800 level. We're going to mark that as a level just because that's also another potential reject area. Show the number. Boom. Okay. So my watch list for today is essentially we're looking for 5,800 SPX reject level. We're looking to fail, or we're looking to fail where we are now, based on where I see us on the QQQ chart, or the SPY chart, because we're at a psych level at 575, so we're looking to fail now. If we failed right now, we probably would look to go down and get the gap if it's a true failure. If not, if we break up, we're going to look for a move all the way up to 5,800 and a reject there. Let's see what the market does. That's going to be our watch list for today. And for those of you who are interested in day trading, definitely hit like and subscribe. We look forward to taking some trades live for you guys. Got to get the subscriber count up.